This is just insane. This is just like madness. It's like Pokemon Go. Oh my goodness, he has a lot of holdings. This is just way too many holdings. It just breaks my heart. Seriously, like this is low-key pissing me off. So, how many ETFs do you actually need? Now that's a great question. Yes, there are thousands, literally thousands of ETFs to choose from. You got S&P 500, you got broad market ETFs, you got growth ETFs, covered call ETFs, dividend ETFs, bond ETFs, REITs, sector ETFs, yada, yada, yada. And you get the point. It can be so confusing to know if you're on the right track for your ETF portfolio. Now in this video, I'm going to break it all down for you on exactly how many ETFs do you actually need, with some good examples, some bad examples, and a full and complete guide. So let's get started. Okay, so at the basic level, less and simpler is always going to be better. Less is always more. That's just what I believe. You can be more concise, more consistent, more effective if you just have less ETFs in your portfolio. And yes, with less ETFs, it's going to be more easier to follow your portfolio, and for when you show somebody your portfolio, that they can understand what your strategy is and what you're investing in, and they're not going to freak out. Now, in my opinion, I always recommend people to have at least a broad market or an S&P 500 ETF at the very least, only because they have so much diversification. You got so many sectors and so many high quality stocks all in one ETF. And that's why I believe that the core of your portfolio should at least be a broad market ETF, so you can get some market matching returns, great diversification, solid dividend, low fees, and so many more things. And so you can also sleep way better at night. Some great examples of broad market ETFs, even S&P 500 ETFs, is going to be SPLG, VU, VTI, and VT. And of course, there's going to be so many other great ones to choose from. So here's other choices as well. Now, in a portfolio, you might be wondering, how many ETFs do you even actually need to own? Now, my answer is going to be 1 up to 6 different ETFs for your portfolio. That's my magic number, and that's what I like and recommend to any new investor in the stock market. Now, you might be wondering, Marcos, why up to 6 different ETFs? That's so many ETFs. You are dumb. That is a lot. You don't know what you're talking about. Now, my answer to that question is going to be that there are also so many different accounts people have access to. You got a Roth IRA, traditional IRA, 401k, 403b, taxable account, crypto accounts even. And for Canadians, you've got your RSSP and your tax-free savings account. There are so many different accounts you could have, and you don't have to have the same ETF for each portfolio or for each account. You could totally have different ETFs for each account, because you could have different strategies, different goals, different preferences, and so on and so forth. For example, your Roth IRA could look something like this, and then your 401k could look something like this, and then your taxable account could look something like this, and so on and so forth. There are so many different strategies and preferences for each account that you could have as an investor, because you have the flexibility to invest with your own money and with your own strategies and goals to get you to that retirement goal of having hopefully so much money. Now, on the caveat though, if you own too many ETFs, like 7, 8, double digits, like 10 to 12 or more, that is way too many ETFs. You are really going to overcomplicate your portfolio. It's not effective. It's not simple, it's not concise. You're just probably buying ETFs for the sake of buying ETFs, like it's Pokemon Go. And it could be so annoying to buy all your ETFs at once. It could be so annoying to check up on all your portfolios. You're going to be literally checking up every single day, every single hour on your portfolio. Don't be that person. You're also going to probably be so stressed and so worried about your portfolio. And when you show somebody your portfolio, they're probably going to clown you, because you have all these different ETFs that it looks like a catalog or like a magazine ad where you have so many different pop-ups. So don't be that person. Why I like 1 to 6 different ETFs? Well, you can do so many things. For one, you can tilt your portfolio to include more of what you want to invest in and what you prefer to invest in as a ETF investor. Number 2, you can use ETFs to complement each other to give you more exposure to different sectors of the stock market. And number 3, you can also include other ETFs for more diversification and just a different strategy if you want to include other ETFs for your main strategy to complement it. And here are some examples. So for our examples, we're going to go through 4 different ETF portfolios that I like and recommend. We're going to go through a 1 ETF portfolio, 2 ETF portfolio, 3 ETF portfolio, and then finally a 4 ETF portfolio as well for you ETF investors. Okay, so we have a 1 ETF portfolio, which is mainly for broad market exposure, Because if you're going to buy one ETF forever, it's going to be a broad market ETF because you have so many sectors, so many stocks, you get the point. Now, our first example is going to be VOO, or the Vanguard S&P 500 ETF. And yes, this can be a perfectly good ETF for one portfolio as a one ETF portfolio. So you can only own one ETF like this one. And it's a great option. You have so many different diversification in this one ETF, and it's a great portfolio. I like it. So moving on, we have yet another one ETF portfolio that I like a lot. We got VT and VTI. With VT, you have both US stocks and international stocks as well. This portfolio is going to be great for the most diversification if you want to own literally everything in the stock market. And then we have VTI as well. Why I like this one a lot, you got large caps, mid caps, and small caps. You literally are more diversified than if you only owned a S&P 500 ETF, which is why I like this one ETF portfolio. And you could also own any one of these ETFs and you can be completely fine in sleeping well at night. Now, if you have like either VOO, VTI, or VT, or any other equivalent, and someone tells you to like, hey, own a dividend fund or own a growth fund, you don't have to. You could honestly own just that and be completely fine. Because you have so much diversification, why would you also want to own those as well? Now, we're going to get to this later, but you can complement it with a growth ETF or a dividend fund, because you could also tell your portfolio, like we talked about before, to more growth, more dividend, and so on and so forth. I don't want to make you seem so confused, but yes, you can own one ETF. It is perfectly fine and good. Now, moving on, we have a 2 ETF portfolio. Now, in my opinion, this strategy is great for investors who are more hands-on than a one ETF portfolio investor. And you'll see why right now with some great different combos for your goals as an investor. There's literally so many ETF combos with a 2 ETF portfolio. And here are some of the best ones I like a lot that have a low fund overlap and are great for long-term investors. Moving on, we have a 3 ETF portfolio as well. This one is a very popular choice where we have a broad market ETF or a foundational ETF, a dividend ETF, and a growth ETF as well. Next up, we have a 4 ETF portfolio as well. This one is amazing for extra diversification. Basically, it's a 3 ETF portfolio like we talked about before, but you have more holdings with a low fund overlap as well, like international, small caps, bonds, gold, and so much more. Basically a low overlap asset in addition with your 3 ETF portfolio as well. Next up, we have this scary concept of fund overlap, everybody's favorite 2 words in the ETF community. Now, this is super crucial when deciding between one ETF and another, especially when combining them in your portfolio for fund overlap reasons, and we'll get to that right now. Fund overlap is basically when you own multiple ETFs or funds that hold similar or overlapping stocks and assets. Fund overlap can definitely reduce diversification, as investors may unintentionally be exposed to the same risks across different ETFs or funds. Why fund overlap matters? Well, for one, it reduces diversification because you're spreading your money across 2 of the same assets, or in this case, ETFs. Number 2, fund overlap can increase your risk. If the shared ETFs perform poorly, all the funds holding them will be negatively impacted. This can definitely amplify your losses during a market downturn or a bear market, especially if you own only covered call ETFs or only Bitcoin ETFs or only growth ETFs and so on and so forth. Now, some investors might say that fund overlap doesn't increase your risk. I will disagree with you right there. Now, if you own a portfolio like this with only growth ETFs like SCHG, VUG, VGT, and some other equivalent, and the market falls a lot in a bear market or a recession, you're going to get rocked. Now, on the flip side, if you own something like a dividend fund or a bond or a international fund or a gold ETF, maybe you are less exposed to those drawdowns. You could have better returns in a bear market than if you only owned the high fund overlap correlation ETFs like a growth ETF, for example. Number 3 is portfolio inefficiency. Overlapping ETFs can definitely lead to redundant holdings, making the portfolio less efficient and achieving the desired risk-reward ratio. Now, do you ever look at somebody's portfolio and you see it and it makes you jump and freak out and you have a headache and your eyes hurt? Yeah, that's when people have way too many ETFs that are the same thing or they are just redundant. So don't be that person as well. Now, fund overlap isn't the enemy in a portfolio if it's well controlled, if you know what you're holding and you are okay with the risk and you can describe your portfolio to somebody and it is just overall a part of your strategy. You can definitely have many different ETFs that have different goals. And if you just know what you're buying and you know your ultimate goal, then I think it's okay. Now, if you're just buying things for the sake of buying them, then that's when fund overlap is just horrible. And you should just probably take a deep breath, relax, and just recoup and analyze your portfolio again and see if they fit your goal and make it more simpler, have less holdings, make it more concise, and just overall more effective. Okay, so here's my golden rule for fund overlap and when it's okay to own, different ETFs in a percentage allocation that I will have for you right now. So anything above a 60% fund overlap, you should definitely take a closer look and maybe reconsider your options and not own both those ETFs if you are having over a 60% fund overlap. So just keep that in mind. Preferably you want to own ETFs together that range between a 0% up to a 30% allocation, all in my opinion. Now, you can also own ETFs from a 30% up to a 60% allocation range. That is what I call the moderate alert zone, where you really want to know and fully understand why you own the ETFs together and if it's best to just own either one or if you should own both for your portfolio. So moving on, we have this amazing website called etfrc.com where you can plug in any two ETFs to see how they overlap to each other accordingly. So if I plug in VOO and SPLG, which is a super big common mistake I see investors make, the fund overlap is way too much at 99%. That is a lot of fund overlap over my 60% range. 99% is definitely not where you want to be. I would definitely not own both of these at all. Basically, all your holdings are overlapping since they track the same exact index of the S&P 500, so only own just one. If we plug in something like VOO and VXUS, then the fund overlap is 0%, which is amazing and great. We are basically adding more diversification to global companies and to global exposure, and there is no fund overlap, so I like this one and this combo a lot. Let's do SCHD and DGRO, another combo that I love a lot. Even though they are both dividend ETFs, they also have different screening for stocks and different strategies. So the fund overlap is just 18%, which is well within my 0 to 30% range for my recommended limit. Let's do SCHG and VUG. The fund overlap is super high at 81%. Of course, that is in my red zone, and I don't like this combo because you are overlapping your holdings a heck of a lot. Now, I'm going to have some fun and review portfolios on Blossom for how many ETFs people should actually own, which is pretty crucial. Now, if you want to see my portfolio and my buys on Blossom, it is completely free. It's a free investing app. Check it out in the link in the description of this video and in the pinned comment section to download Blossom. I will see you there on Blossom and on Blossom right now. So we have our first victim. We have India. She follows me on Blossom, so that's awesome. And we have our portfolio right here, and I'm going to just click view more, and then we're going to see what happens. Oh God. Okay, so she has a lot of holdings. Oh my gosh, she has a lot of holdings. Oh my goodness, she has a lot of holdings. Okay. I'm scrolling and there's way too many holdings. Like, I don't even know what her strategy is. I don't even know what her goals are. Oh God. She's got VOO, SHD. Her main core holding is VOO, VRE, QQM, VDY, SPLG. Why does she have she has SPLG and VOO, so I would just only have one. Long story short, I don't even know the strategy. I don't even know her goals. I would say that this is a bad portfolio. And let's see her. Oh God, okay. Her gains aren't even the best either, but yeah, definitely consolidate for sure. Okay, so next up we have Marine Finn. She also follows me on Blossom, which is also awesome. That also rhymes as well. Trying to get rich just like the rest of you. Okay, let's see your portfolio. There's no way. There's no way. There's no way. Oh my God. A lot of mutual funds that are like large cap and total stock market, SPY, VTI, and VOO only have one. QQQ, you can have a lower cost fund by just owning triple QM. This is just insane. This is just like madness. It's like Pokemon Go. This is just way too many holdings. It just breaks my heart. Seriously. Like, this is low-key pisses me off. I would say 299 holdings. That's way too much. Have less holdings and focus on just a few holdings. You don't even need to be nitpicking like that. And probably don't even invest until you really know your strategy and your goals. Just take a step back, take a deep breath, and just I don't even know what to say. Next up, we have Clarence. I think that's how you say her name. He follows me in Blossom as well. 4 ETFs, mainly VU. I like that. I like that. 73%. I like that a lot. Triple QM at 14.7. I like that a lot too. Less, kind of a lower holding. So you have mainly your core at VOO. I like that a lot. And then 5.9% to DGRO. And then about 5% to SHD. I like it a lot. I like it a lot. I would say this is a good portfolio. I like it. And then we have Brandon Beavis Wealth on YouTube. He also follows me as well, but I'm not going to scroll to find my profile. So Brandon, mostly in VU. Awesome, 60%, I like it. ZQ or ZEQT, BMO All Equity ETF. You basically own international and US stocks as well, to my knowledge, and some small caps. I like the 30%. I like it a lot. China ETF, 3%. Great for global exposure. And then Lockheed Martin at 2.4%. That's under my 5% individual stock rule. Brandon, mwah, it's great. Awesome. I like it a lot. Okay, so if there's anything that you learned from this video, simple is always better. Less is always more. Don't own double-digit ETFs. Know your own strategy and goals and look in the mirror. And just don't buy so many ETFs. Keep it simple. Keep it concise. I want to look at your portfolio, or somebody should look at your portfolio and really know what your strategy is or where your goal is, right? So hopefully you guys found some value in this video, because I love you guys a lot. And hopefully you guys like this video because this cute puppy did as well. Now, if you're a beginner, check out this video to see my whole entire portfolio breakdown, as well as other ETFs I like for beginners if you are new to the stock market. Now, I love you guys so much. Continue to crush the stock market and take it easy. Peace.